Welcome to the Fear and Greed Daily Interview. I'm Jennifer Duke. As Australia's largest bank, Commonwealth Bank already has an incredible insight into the real economy. That's where and how we earn, spend and save our money. And when it comes to consumer activity, those insights just became even more accurate with the launch of the improved CommBank Household Spending Intentions Index. Stephen Halmarick is Chief Economist for the Commonwealth Bank, and he's been leading the charge on this new data set. Stephen, welcome back to Fear and Greed.
Thanks very much. Very good to be with you again.
So can you start with the basics for us? Why are household spending intentions so important?
Well, household spending is the largest part of the economy. Consumer spending is around 50% of the Australian economy. So really important to understand what consumers are doing, how much money they're spending, what they're spending their money on, if we want to understand what's happening in the broader Australian economy. And of course, that also helps us forecast things like what the Reserve Bank might be doing with monetary policy.
And where do you get all of this data from?
So the data is from approximately 7 million Commonwealth Bank customers. That's roughly 30% of all consumer transactions in Australia. Really importantly, the data is de-identified, so we meet all the privacy and regulatory requirements, but it's all internally generated data from things like credit card spending, debit card spending, keypad transactions, BPay, ATM, direct debit. So it's a very comprehensive data set.
And you've obviously got a lot of data products already. How does this new one fit into the mix of that suite of products?
So we're actually calling this one the CommBank Household Spending Insights report. It replaces the previous household spending intentions. And the key change here is we have really upgraded the statistical robustness, if I can say that, of the series. So all the data is census weighted to be nationally representative of Australia. So we take out the skew of market share changes that we might have, or parts of the population we may have a higher or lower that bank with us. Also, the data is now all seasonally adjusted. So people who are used to looking at Australian Bureau of Statistics data, we usually always look at the seasonally adjusted numbers. So now we're seasonally adjusting all the data. So it's representative of the Australian population. It's seasonally adjusted, all de-identified. And we're looking at 12 different spending categories, which align with the ABS definitions and categories as well. So it's very much aligned with the type of data that people would be used to seeing, but it's a very large data set and it comes very quickly.
Sounds like you've been very, very busy. And looking at that July report as well, what does that tell us about the state of the economy right now?
Well, so for the month of July, which is the first month we've released under this new household spending insights, spending on the month was actually unchanged, so 0% change on the month relative to June. And we could see there was increases in spending on things like household goods and transport and hospitality and education, and they are offset by reductions in spending on things like household services, recreation and utilities. But I think that the number we're really focused on is the annual percent change. So July this year compared to July last year was up only 1.3%. And we have to remember that's in nominal dollars. So after inflation, it's going backwards. And that annual rate was running at 8.3% in May last year when the Reserve Bank first started increasing interest rates, and actually peaked at 18.7% in August.
Gosh.
As before all the interest rate rises had started to have an impact. So since August last year to July this year, the annual rate's gone from 18.7% to 1.3%. So that really shows the big impact of the 400 basis points of rate hikes from the RBA, over the course of the last year or so.
And now you mentioned the RBA, they only just released their meeting minutes yesterday for the August meeting. What do you think the RBA might make of your new data, and what does it mean for interest rates going forward?
Well, our view is that the interest rate hiking cycle is now done. So, in hindsight, the June rate hike was the last one, having kept rates on hold in July and August. And, the minutes, we think, reinforces that. There was actually a section in there where the Reserve Bank said that at the current cash rate, there was a credible path for inflation to return to target, over a reasonable time frame. They still are hinting at potentially another rate rise, But our view is that we've seen the last rate increase. The hurdle to another rate rise is quite high. So this our household spending insights report, which is showing that big reduction in the annual rate of spending growth, reinforces in our mind that the RBA can now hold the cash rate steady for an extended period.
Stay with me, Stephen. We'll be back in a minute. I'm speaking to Commonwealth Bank Chief Economist Stephen Halmarick. Clearly, your insights report is very, very helpful for economists who are looking to see where things are moving and what's happening. But how can businesses use the information, and what about policymakers as well?
Well, so as I mentioned, we have 12 separate categories. So it's really, I think, interesting to see, what people are spending more money on and what they're spending less money on. So if you look at, again, the change over the year to July, some of the big increases in spending were on things we probably don't like spending a lot more money on. Number one was insurance, was up 13.2%, education up 9%, health up 8%. But interestingly, recreation spending was still up 7.1%. So it seems like Australians are still wanting to spend money on recreation, but really going for the big ticket items. So we could see in July, not surprisingly, a big increase in cinemas. So that's the
Barbenheimer
Barbenheimer effect.
Yeah.
Also, there's some big events happening at the moment, as we all know, the FIFA World Cup. There was a Bledisloe Cup down in Melbourne. So, these kind of bigger events, people still look like they're, setting some money aside. But if we look at what spending has declined over the last year, household services down a long way, down nearly 8%, transport down 6%, household goods down 5.4%. So we're spending less money on those things into the house, both services and goods, and having to spend more money on things like insurance, education and health, with a little bit for some big ticket items on recreation.
I do love that people somehow manage to find the space in their budget to go to the Matildas and go and watch Barbie. Yeah. It's brilliant.
Yeah.
And while I've got you, can you take me through the wages data that came out yesterday? Were there any surprises in those figures for you?
Well, it was a touch lower than both our forecast and the consensus forecast. It came in at 0.8% for the quarter against our forecast of 0.9%. The annual rate really not accelerating. And actually, we've now had 3 quarters in a row of 0.8%. So there's not a lot of sign of a big acceleration in wages growth on that measure. But I would caution that this is the June quarter numbers. In fact, the numbers are collected in May. So they're a little bit dated now. They don't take into account the national wage increase or the larger public sector agreements that have happened recently, around 4%, particularly here in New South Wales. So that September quarter wages number, which we don't get until November, is more likely to be a higher number, given that national wage case and some big increases in public sector pay rises. But the number we got yesterday just reinforces in our mind that the wages outlook is consistent with inflation returning to target range over a reasonable period and the RBA rate hike cycle now being done.
So if you can look into your crystal ball for a minute for me, what do you think we might see in the spending insights next year at about this time?
Well, over the next 6 months, we would expect it to continue to weaken. We have not yet seen the full impact of the RBA's rate hikes. So the May and June rate hikes are not yet being paid by people. So that's still to come through the variable interest rate mortgage system. And in addition, we're pretty much right now at the peak of the fixed rate mortgage rollover, but that will extend into 2024. So the next 6 months or so, we'd expect to see our household spending insights number continue to soften. But we're expecting rate cuts to get underway potentially as early as the March RBA board meeting next year, which under the new timing will be the 19th of March rather than the first week of March. And so rate cuts through 2024 should help household spending stabilise and begin to pick up a bit towards the end of next year.
That sounds quite positive, actually. I'm hoping that we get a little bit of an uptick towards the beginning half of next year. So that's very exciting. Look, Stephen, thank you very much for talking to Fear and Greed. I really appreciate it.
My pleasure. Always good to be on Fear and Greed.
And that was Stephen Halmarick, Commonwealth Bank Chief Economist. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Jennifer Duke, economics correspondent at Capital Brief, and filling in for Sean Elmer. Have a great day.